Welcome back for another GEVO technical analysis update. This is Dr.B on Webull, and I will be answering whether GEVO will continue to go up and what is a realistic price we can expect. Before we start, I would like to mention that I'm beginning to live stream the price action of GEVO every day. My goal is to let you see what I see every day, which is the price action moving nicely between the trend lines, channels, support, and resistance lines that we draw, as you see it in my technical analysis videos. The stream is muted, so you can join and leave any time in the day to check it out. There is, however, a live chat. Alright, so back to technical analysis, and let's start by looking at the big picture. One indicator I would like to add to our toolbox is the Ichimoku cloud indicator, or the IC indicator on Webull, which follows and predicts the price movement. Let's check the monthly time frame. If we look at the Ichimoku cloud, we will see something exciting. The blue line, called the conversion line, which corresponds to the short-term price action, has a positive slope. Since 2012, this has happened only once. Another observation is that the conversion line is the closest to the red baseline, which is medium range price action. Crossing it is a bullish sign and usually triggers a buy signal. Finally, the red cloud, which is not good, is getting smaller and closing and may turn into a green cloud in the future, which is good. On a relatively smaller time frame, we use the weekly to get some sense of the general direction. As we predicted in an earlier update, this week's candle closed above 50% of the red candle 2 weeks ago and had a higher volume too. This develops a 3-candle pattern called Morning Doji Star, which is a bullish pattern. The EMAs are indicating the continuation of the bullish trend while gaining higher slopes. The DMI is showing a stronger buying pressure trend and weakening selling pressure with an ADX of 41.33. This means that this trend is gaining momentum, suggesting continuation. The RSI is showing that we are getting to 70, which means it's overbought. In a very strong bullish trend, however, such as GEVO's, stock can be overbought for a while, so it can still push the envelope, go above 70 and stay above 70 for a while, and then pull back. So I'm not really worried about this. We are walking along and actually pushing the upper band in the Bollinger Bands. This is good and bad in a way, so let me explain. It's good because this means we are pushing the average price up. By now, we already know this is happening because GEVO is moving up in a stronger bullish trend. It isn't nice, however, because it shows this stock is being overbought and is due for a pullback. But, and this is a big but, we will notice that the bands are getting wider, but they are not extremely wide yet. So similar to the RSI, we can still continue to push this band further and then pull back later on. Also, we understand pullbacks are necessary and healthy, but a dramatic pullback usually happens if the higher prices are unjustifiable, which is not the case in GEVO. So even when we have the pullback, it's not going to be crazy. Look at the Ichimoku cloud on the weekly chart. We had such a strong momentum last week to pierce through the Kumo cloud for the first time on the weekly chart since 2012. I don't think this momentum will wear off so fast. So in general, yes, we are approaching the state of being oversold for the next week, but we are not deep in that region yet. So we may still see a push to higher prices before the pullback. Let's have a look at the daily chart. Similar to the weekly, the RSI is showing that we are starting to be overbought. Again, it doesn't mean we immediately go back down. Look back at what happened in November. We went above 70 and stayed there for a few days before the pullback. The ADX is increasing and currently at 42.7. This means the current trend has higher momentum and strength. The current trend, by looking at the direction lines, shows a decreasing selling power and a decreasing but a slightly high enough buying power. The Ichimoku cloud indicator is giving multiple buy signals. The conversion line is crossing the baseline. This is happening above the cloud, and while the lagging span line is above the price action, and moreover, a green cloud is forming. All of these are buy and strong buy signals. We are trading above and away from the super trend line, which is good, but the fact that the super trend line has been flat for a while indicates high volatility. We want to see it going up. The EMAs are pointing up with a sharp slope. The question is, could this be the peak and Monday it drops? The way Friday's candle looks suggests that this is not happening. The candle is rejecting lower prices and it's very bullish. Overall, we know we are due for a pullback, but we can also see from the indicators that we will be pushing for higher prices first. So what levels should we look for this week? Let's overlay our drawings to see what to expect. If you watch my live stream of the pre-market analysis on Friday, you probably know that GEVO broke the small channel I had before in the last couple of trading days. This was exciting, but something told me that it's too early to break such a channel, so what I did is that I adjusted the pivots to build a channel that is a little steeper and contains the price movement as we can see here. On the weekly and daily, the chart shows that we are breaking the outer resistance of the major trend we have been in since August. If we drop to lower time frames, you will see that we are actually still within the channel with occasion breakout of the channel. We are currently at the inner resistance of the major channel and also the inner resistance of the small channel. This makes this level very strong resistance, and that's why we couldn't break it on Friday. On the conservative side, we may break the inner resistance of the major channel, push to 38.2% Fibonacci extension level sitting at 2.52. If we break this level, we may run all the way up to the outer resistance of the major channel at 2.76, with a possibility of testing the 50% Fibonacci extension level at 2.8. If we don't break it, however, we may drop all the way back to the 23.6% Fibonacci retracement level sitting at 2.3. This is also the inner support of the small channel. If this level doesn't hold, then the next one will be at 2.2. Of course, all of this is not valid if we get a PR anytime soon this week. This is because the news will break the structure and we may see a spike all the way up to the 100% Fibonacci extension level at 4. If you enjoyed this video, all I'm asking is to please let me know this by hitting the like and the subscribe buttons. Thank you for watching and happy gains.